Hi, my name is John Dowdy, and what I'd like to do is give you a quick review of the stock market for the weekend in August 2nd, 2013. This is called Bull Remains in Control because last week was a very good week for the bulls. We romped to a brand new all-time high. After you view this video, if you'd like more data, please come to my website, www.superchargedretirementIncome.com. Now, what we'll be doing is reviewing charts, and the review of charts is called technical analysis. Some people believe in technical analysis and some people don't. If you'd like to see why I think technical analysis works, then please look at a recent post at my website. Okay, let's go and look at the S&P 500. S&P 500 is shown here as in terms of SPY, which is the ETF for the S&P 500. And as you can see, we have been in a green uptrend channel since November. And that channel has pretty well contained the market, except for a couple of times when we moved outside the channel, but moved quickly back in. Right now, we have moved above resistance levels, which was a high here, and these resistance levels have now turned into support. We consolidated over the last few days, and now we've broken out into a new high at 170.97. The only resistance now is the channel uptrend line, which is up around 174, 175. Now, in technical analysis, what we do is look for patterns and to see if these patterns develop. One pattern that we are looking at is a short-term pattern. This is a zoomed-in version of the S&P 500. And as you can see, over the last several days, we have been consolidating in a very tight range of 2.5 points. On Thursday, we broke out of that range, and we went even higher on Friday to confirm the breakout. Now, when you're trading in a range, this is a 2.5 point range, and breakout, then the move should be at least the size of the range. So we broke out here at 170, and if we add 2.5 points to 170, that says we should get at least to 172.5, and that's called a measured move in technical analysis. So the first bullish pattern is this breakout in the short term, and that says we should go to 172.5, and we'll get some resistance there. The second pattern is much larger. It's called the cup and handle patterns. Cup and handle patterns are usually pretty reliable. And then we have a large cup and handle pattern here that has been going on since May. So the market made a cup, came back up here, and here's the handle. The breakout point is right above the handle. So when you break out of a cup and handle, technical analysis says you should move upward the same as the depth of the cup. So the depth of the cup here was 14 points. We broke out at 169. So we should move another 14 points from 169, and that would put us all the way up to 183. That's called the measured move associated with the cup and handle. As long as we stay above the cup and handle, the handle level, then this move is valid. The target is still valid. If we move below it, then the pattern is killed off. So we have two bullish patterns that are in play and no bearish patterns at the moment. So the bull is very strong, and that's also emphasized by the fact that we haven't made a new all-time high last week at 170.97. Near-term support's around 166 to 169. Long-term support, though, is at 165. That's very strong support. That's where is the bottom of the channel and also the 50-day moving average. As long as we stay above this support, it's clear skies ahead. We have two bearish patterns in play, one short-term to take us to 172.5, one long-term pattern to 183. These patterns will be in effect unless we move back below the support levels. Now, the market's already advanced 20% this year, which is excellent. And there's still no bear patterns in play. So we would expect even higher as the days and weeks move about. So enjoy the bull market. At some point in time, we'll get a break. But until we do and start developing bearish patterns, just enjoy the move. Quick legal disclaimer. The contents of this video are strictly informational purposes. The Views that I give you are mine and mine alone and should not be construed as any investment advice or any offer to buy or sell securities. You and only you, of course, are responsible for your investment decisions. And as I'm sure you know, investment involves risk and loss. Past performance is not an indication of future profits. So good luck. Thanks for viewing. Hope next week is a good week for the market. And as I said, if you'd like more data, please come to my website, www.superchargedretirementIncome.com. Thanks.